weighted average cost using periodic valuation of inventory. Now, as we know that average cost of inventory can be calculated either by using the continuous method when the inventory is updated every time a new purchase is made. And there is a second view which is considered as periodic weighted average valuation of inventory. Actually, what happens, those organizations who run a regular accounting system, and they have the working people in the accounts department who actually maintain the accounting system, and they can update the inventory on a day-to-day basis, they use continuous method. But very small businesses which cannot afford to keep the services or employ the services of full-time accountants, not even part-time accountants, on a regular basis, they do not update the inventory on a regular basis. So what happens basically, that inventory is updated at the end of the period, at the end of the period, and end of the period can be end of the month, end of the quarter, or end of the year. Is that right? So it's a very simple method. Right at the end of the period, we work out the weighted average cost of the inventory, and then we update our inventory valuation. So what happens actually in this method? Very simple. What we do is we work out periodic average cost per unit. That how much is the cost per unit on average basis at the end of the period. So the formula we use here is very simple. We take the cost of opening inventory, then we add the cost of all purchases. So cost of opening inventory plus the cost of all purchases, cost of all purchases, and then we divide this by units in opening inventory plus units of all purchases or receipts. Okay, so if we want to apply this methodology using the exercise which is right in front of us, here is the total cost of opening inventory. Can you see opening balance 300 units? So we can say 600 pounds in the opening plus now the purchases. Now look, here is one purchase 440 pounds, here is second purchase 625 pounds, here is the third purchase 420 pounds. So we will add the monetary value 440 plus 625 plus 420. In total, cost of purchases is 1485. That is the cost of opening inventory plus cost of all purchases during the period. Then we divide this by the units of opening inventory, which are 300 units, plus how many purchases? 200 units purchased here, plus 250 units purchased here, plus 150 units received or purchased here. So in total, it comes to 150 plus 250, it is 400 plus 2, 600. So total purchased units or received units were 600. Okay, so from here, we use the calculator. 600 plus 1485, then divided by 900, and we get average cost of 2.316, or if you fancy, you can make it 2.32 per unit. Okay, now because I seen in this exercise, I worked it out that the closing inventory was 200 units unsold. Okay, so they purchased some units, they sold some units. So at the end of the month, they were left with 200 units. So these would be valued at 2.32, giving us approximately the cost of 464 pounds. Okay, so not to worry, not to get too much worried about decimal places or rounding off. Okay, so if your calculators are giving you a few pounds more or less, your concept is still the same as mine.